Good afternoon and welcome to our discussions on financial statements and some specific items on the financial statements. We will see acquisition of assets. In the process, I want to focus attention on the accounting for leasing. Asset can be acquired either for cash or for credit or on lease. If you acquire for cash, cash reduces and particular asset goes up. If you acquire on a lease, the asset particular increases and a corresponding liability is created. Now let us see what happens on a lease. In case of a lease, the ownership of the asset is not passed on to the buyer. So therefore, there is a tricky question, will or should the asset appear on a balance sheet? The answer to that question depends on whether it is an operating lease or a finance lease. In case of an operating lease, no asset, no liability, only an expense. And in case of a finance lease, an asset is created and a corresponding liability is created and an expense is created. But the question is, what is this operating lease and what is this finance lease? Finance lease, let me take up first. If a significant part of the future benefits of the assets are transferred, then it is a finance lease. This can also be explained in another way, that if the lease life accounts for a significant part of the life of the asset, then it becomes a capital lease or a finance lease. So that means, in principle, in spirit, you are transferring the asset to the buyer, though legally you are not doing so. So what happens in a finance lease? In finance lease, the accounting standards all over the world says, recognize the asset and create a liability and show the corresponding expense. But the question is, what is the value of the asset? So the value of the asset is equal to the present value of the lease payable, and the value of the liability is present value of the lease payable. So that means you create an asset and a corresponding liability. Now let us take an example to understand that. If suppose the annual lease is equal to 5,000, the period is 4 years, and interest on that is about 8%. So this, and let us assume that this is a finance lease. So the first question is the present value of that lease. The value of the asset is a present value recognizing the rate, the amount and the period of the lease, which can be computed in a Excel by taking the PV function, which comes to 16,560. So you create a liability of 16,560 on the sources side and the corresponding asset. That is at the time of initial recognition. Later on, during the year, you segregate the amount of lease into interest component and depreciation. Interest will be on the lease amount payable, and the depreciation is a tricky question here. Depreciation, you can follow the normal accounting principles of SLM or RBM or a repayment schedule based depreciation. Let us understand these. Whereas in case of a cash flow, the entire lease payable for the year is shown as an outflow. And in the balance sheet on the asset side, the cost of the leased asset is shown, less accumulated depreciation every year. On the sources side, lease payable minus the lease payment. Whereas in operating lease, as I mentioned, only lease is shown as an expense, no asset, no liability, and in the cash flow, the lease payment. Now let us see how the financial statements look like. In the income statement, the interest and depreciation are shown. On the cash flow statement, you see the lease, and in the balance sheet, you see the leased asset and lease payable. At the end of the year, you depreciate that because of depreciation, and you reduce the lease payable because of the amount of the lease paid. So where is this leading us to? To understand the difference, you see the balance sheet in case of operating lease. In case of an operating lease, an expense and a cash outflow, no asset, no liability. Whereas in the previous case, for the same asset, you have asset and liability. In the now, there is no asset, no liability. So this leads us to an important question. Will the profit be affected by treating a lease as an operating lease or a finance lease? The answer to this question depends on the methods of depreciation that you adopt. Maybe in one of our later sessions, we will try to combine depreciation discussion along with the lease discussion to understand the effect of the lease, depreciation and its impact on the profit. Thank you very much.